Hi, guys. Welcome to today's episode of Build Your Foundation. I've got a good friend and investor of mine, Rick Roccasalva, here. Rick's got a very interesting journey. He's a long-term IBM employee, turned real estate investor, then transitioned to being a restaurant owner, and now is a partner at iStreet Realty, helping people with similar backgrounds grow on their real estate investment journey. Would you say that's fair?
Yeah, I think that's a nice summary. I mean, I had a little in between being a full-time real estate um, agent. I had a small at a startup company out of Korea, but other than that, it's been a corporate journey for the first chunk of my career, 27 years, and then transitioned into real estate and partner at this company we've launched and most recently, and it's been quite the journey for sure, man.
Yeah, and it's funny because I know, Rick, you just said it was a small Korean company, but it's a large publicly traded Korean company, and you were basically running the entire Canadian division and
Right.
building it up from scratch, right? So don't throw it under the rug like it's the small company. You've done a lot of big feats, so take credit for that.
Thank you, man. I appreciate it. Thank you. Yeah, I mean,
So, obviously, a little bit about how we got to know each other. How about you tell me a little bit, tell the audience a little bit how did we meet? How did you get to know us?
sure, no problem. Like it was a number of years ago, Mitt. I mean, where I was looking at doing some diversification in some of my investments. So I was referred to you through another mortgage broker that as an accountant to kind of say, hey, you know what, that's individual Mitt. You were running your accounting firm at the side, kind of on the side. So we had a little interview and we hit it off right away, right? And that was a number of years ago. And because I was getting more and more complex in some of my side investments, and I needed some expert advice. So we started our relationship as that way, right? As an accounting relationship, and we quickly evolved into where we are today, which is amazing. Right? So
Yeah, yeah, no, for sure. And I still remember that. I do think it was Dahlia
yep,
who introduced us. And yeah, I guess for everybody in the audience, like I had an accounting practice focused on real estate investors, while also growing our real estate portfolio. I think Foundation Capital was just in the early stages. It was like the first, I think, 2 years or so into it.
hmm
And obviously, a big reason why, again, probably Dahlia connected us, is that a lot of investors try to speak with a professional or an accountant or lawyer who has real estate experience, not just works on real estate transactions, but actually is an investor themselves.
yep,
Because you're able to think about things like financing, things about some legal implications, lender reporting, things that you're not just doing just for tax purposes. So you're not just trying to show zero income, pay zero taxes or whatever, but you're also trying to make sure you're be able to qualify for the next mortgage. You're going to be able to take that equity out when you refinance stuff, right? And I think obviously, Rick, chatting with you, at that time you were at IBM, right?
yep.
And it's very cool to see. Obviously in this day and age now, people don't usually dedicate themselves long term to a company, and I think you put north of 20 years in, right? So,
Yes.
tell me a little about that. How did you kind of get started?
Yeah, no problem. I'll keep you a little bit of the journey. So when I graduated way back in University of Toronto with a business degree economics, I thought to myself, I want to get into a good, solid company, traditional, right? And so I had the opportunity I interviewed at IBM and I ended up landing a role there way back in the late 90s, God help me, right? And I had envisions, okay, I'm going to be there for, 4 to 5 years, get myself a good foundation of skill set and then kind of evolve, right? But honestly, it was 26 years later, I evolved into multiple different roles. And the beauty about the culture there at the time, and it still is, I think, is you don't necessarily stay in an area for more than 2 years. So I had the opportunity to evolve. I started in a financial career. That was my background in university. So I was various finance roles of management, and I enjoyed it. And then I had always a yearn to get into sales, right? So I did a few stints in operations, which is closer to sales. And then the later 10 to 15 years of my career, I was in supporting sales and then having sales running a sales team and running a sales organization, supporting, like, it was amazing. Like, I was supporting the Caribbean. I got to travel to the Caribbean multiple times, and then working with partners as well, the channel partners, different companies that did business with the company. So it was great. I think
you were having like a very fulfilling corporate career, I guess, as you're doing that, right?
Yeah.
Just, I think what you're saying over there is like you got to continue to build your skills every few years. You were never kind of stagnant.
100%, and that's kind of the reason why I stayed so long is I was never doing the same thing more than 2 years, and during that time, every time you're evolving, the education that I went on, management training is extensive, and just various corporate trainings that I did go on, it really put it a rigor. You don't realize it at the time, but then you're saying to yourself, geez, when I went to the other company, which we'll get into, and then now into my current business, there's a certain rigor, there's a certain commitment that not a lot of people have, at least what I'm witnessing, where, geez, you're there, you're consistent, you're committed. It's just in us, and it's built us in that culture that I was in at that corporate.
So I think a big part of it, and this is where I think I went working at PwC and some other firms where I got it, is like they have systems, right? They have pre-existing systems, and at a young age, you're being disciplined in that system, and you're learning, okay, if you want to run a successful organizations, you need those backup processes. You need things in place. You can't just give it to Buddy, who's just a one-man shop kind of business, because he's the fault point, right? There needs to be backups. What happens when one employee calls in sick and things like that, right? So
100%, and I couldn't have said it better, Amit. And yes, and so I'm at IBM, and I'm enjoying my career. I'm evolving, but there was always kind of in the background something I wanted to do more, right? I always wanted to do so. I've always was interested in investing, right? Always in properties and
did that start back when you were in university, or like how did you kind of?
I had the interest in university. I just didn't have, I guess, the capital nor the wherewithal yet, right? So I said, let me. So the first few years of being, at the corporate world, focused on my career, and then started a family and kind of focused on that. But then I said, okay, you know what? How am I going to really? I was never content to kind of say, hey, I'm going to rely on my corporate income, right? I always said to myself, there's got to be a better way. So I read various books. I mean, everybody's read Rich Dad Poor Dad, including myself, a few others, but that was my main one that kind of really inspired me. And I said to myself, there's got to be a way. And so I dove head first, and I said to myself, what's the easiest way a guy like me can have the guts to do something and kind of set it and forget it, if you will, right? And so I said, I bought my first kind of, it was a townhouse, pre-construction townhouse I bought, right? And I said to myself, you know what? I can put a little bit down, and then once it closes, I'll figure it out, right? So I put a little bit down, and then it closed, and so then I found the right renter. I did the right things. I did my research, and then I set it and forget it. And at the time,
and how many hours would you say you put in for research, or did you put a lot of research, or did you just pull the trigger?
I as far as purchasing, I did a decent amount of research. I mean, I purchased it in Vaughan, and I lived in Vaughan at the time, and so I knew the area. I wanted to be comfortable in where I was because I knew I was focused on my career. I had my family. Those are, my family is number one, then my career, and then investing is on the side, right? So in that order. But I knew I didn't want to put too much, so I figured, what makes the most sense? Invest in an area that makes sense. Invest in an area that I know people want to be in. And then what's the worst that's going to happen? Either sell the property or I just wanted it to maintain itself. I didn't want to make money. I wasn't going to say no, but I wanted it to maintain itself, right? So I said to myself, I'm going to put 20% down once it closes, and then I figured out that the rent would cover at the time, so I did it. I purchased, did the purchase. It closed about a year later.
And when was this? When did you buy it?
2011.
Okay, 2011. So I guess starting at IBM in the 90s.
Yeah, late 90s.
Late 90s. Yeah. And then it's only in 2011. So let's say like 15 years or so goes by, and then you finally pull the trigger and you get into real estate. Okay.
Exactly. Right.
So being a fresh grad. Yeah.
A little less, but like just around 11, 12 years. But anyways, yes.
Okay.
So we're in that range, right? So it closed. I got a renter in there, and it was great. I mean, so everything works out. And then I said to myself, "Geez, I mean that was pretty good. So I'm going to buy another one." So I picked up another one just outside of the Vaughan area in Bradford. I did a little research on Bradford. Bradford was expanding at the time, 2016, 2015 in time frame, and I figured, you know what, do the same thing, pre-construction townhouse. And the reason why I wanted townhouse, it was freehold, there was no maintenance costs, and fundamental analysis. I figured, you know what, you buy it on pre-con, and then once it closes, based on my rental analysis, it should cover. All right, so that closed, and great. I had the two properties, and then shortly after that, when it closed, I decided, you know what, I saved up a little bit of money, but I also looked into refinancing one of my properties. I said to myself, okay, you know what? Equity has been built up. The renter has been paying the mortgage and all the bills. And I said to myself, let me talk to the bank. So I talked to the bank, and then I was able to pull out a little bit of money in home equity line of credit. So I used it as a home equity line of credit. So I had a little bit of money there, and I said to myself, I'm going to do it again with that money, because I figured out that if all three renters would cover all the debts, including the home equity line of credit. So I bought another one, right? So
Nice.
So I did the third one, right? And so it's worked out well, right? And the market was on my side at the time, 2016, 2017, 2015, right?
And were you doing anything like trying to force the appreciation, getting turnovers and stuff like that?
Not
Or?
yet. No, I didn't do anything like that. Honestly, it was just, again, I wanted to be simple, corporate guy, focused on family, career, and but also have this side type of investment journey to kind of feed that future. I never had visions of, oh, I'm going to pull money out in 1 or 2 years. I was always, these are long term, right? I knew that, I knew enough that, these are going to be revisited in 10 to 15 years, right? And that's kind of the way it worked out. And then I just kept that engine going, to be honest. Through 2016, 2017, I got a few more up to 2020. I've got a few others that I've done, refinanced a couple along the way, and all townhouses. I got a couple of condos as well in that journey in downtown Toronto. I figured, you know what, I did a little analysis, and they're not building more land in Toronto. So I figured, I always wanted a couple of pieces of property. So I ended up buying a couple of condos during that time, pre-construction. And they recently closed a couple years ago. They were way delayed, right?
Yeah.
And then thankfully they worked out too. And then when I really got interesting, and as you and I started talking, was you know what, I force appreciation. You to your word, I said I always wanted to try that, right? So at the a number of years ago, in 2022, just in 2023 timeframe, I got the opportunity to buy a semi in Woodbridge. Okay, had a little bit of cash flow, refinanced a couple of properties, and I knew the type of property that it was. It was a 5-level back split. So anybody's in real estate will know there's multiple entrances there. So I figured, you know what, it was an older home. The market had corrected a bit, so the pricing was right, and I figured I'm going to seize this opportunity. I had a little bit of experience with renters and dealing with that. I wasn't nervous to be able to have multiple renters in one property. So from all those ones that I've been doing, that all been single family freeholds, with the exception of my 2 condos. And then I said to myself, I'm going to try this. So I bought the property. I renovated it. Okay, so I renovated it, and I managed to put in multiple renters in that property. But I renovated it to a standard of the area. It's in Vaughan, and I renovated it to the standard that, you know what, I'm going to attract top tier individuals here.
Right.
And it worked out wonderful. Right? I've got renters in there, and they're great people, and it's a great product, and it's worked out wonderful still to this day. It's a triplex, right? So and it was wonderful there, and and then I said to myself, you know what, the real estate's been great. Let me try something different, right? A good friend of mine, we had the opportunity to open a restaurant very close to where I live. I live in Nobleton, and you know, it was an opportunity that, like, we're good friends, and so we did it. We did it. It's called Vivo Pizza and Pasta. It's a Nobleton location. I co-own it with a good friend of mine, Enrico, and it was one of those things that, listen, if we're gonna do this, we're gonna do it with passion, and with commitment, and we're gonna keep it simple. And I applied my mentality of my corporate world and my real estate of just, you're going to keep it simple. You're going to put in your passion in there, and you're going to make sure that you have systems in place, kind of like we talked about before with IBM. My systems are going to have the right individuals that are working there. I'm going to pay them right, and we're going to have effective communication. Okay, and to me, the success of a restaurant is really twofold: is service, and just as and food, right? Obviously, quality food, service, and consistency. Three things, right? And if you keep those three things working appropriately, it works out great, and it has. I mean, it's been wonderful experience. I mean, there's work. Now it deviated from my set it and forget it and keep it on the side. It's very close to where I live, so I figure, you know what, we're going to give it effort. We're going to set the systems in place, which we have. And we got great people working for us, and we got a great thing going. I'm part of the community. I met so many wonderful individuals, and
I think a big thing to add as well is, like, in the beginning, you still got your hands dirty. You went and you worked the restaurant, and you were showing up daily, figuring that stuff out, right? And I think that's kind of what helped you set you apart, because I think you were saying, in comparison to some of the other franchises, I think you guys, for someone who's relatively new, were performing really well, because not only did you, again, pick a good location, you found one that was growing in demand, and then you were able to set in your people and really hit those targets almost immediately, or over a 6-month period. And I think we were talking about it at the time, and I think you were nervous too, right? You know, I know we always chat, we always talk about multifamily deals or other opportunities, whether it's a car wash or something.
Yeah.
And I think one of the things was, like, you did your research as usual. You looked up other franchises, kind of what sales are doing in the store. And I think this was still like pandemic, like it's post-pandemic, but it's still like people aren't really going out to restaurants to eat. A bunch of restaurants are shut down. People don't really know if it's going to hit or not. Especially in an area like Nobleton, where you're going to have to drive to the restaurant, right? And it isn't necessarily like delivery takeout was going to just pop on day one. So I think that was obviously one of your concerns, and I think you obviously handle that by showing up to the store every day, or almost every day, with your partner, kind of identifying kind of what, like, the audience or the people or the demographic that were there and coming, and then kind of improving the marketing initiatives towards that group. Right now, I think every time I come to your restaurant, it seems pretty full, to be honest. So
honestly, man, we're blessed, and you're 100% right. I mean, I'm not naive to the fact that, restaurants are not an easy venture to take on, but they're definitely a great venture if you have the right mindset, right? And if you have the right mindset, that I'm not trying to squeeze every dollar to that place. What I'm trying to do is I'm fostering, I'm helping. I want to be part of the community, and my mindset was, we're going to have some fun with this. We're going to meet some great people, and I'd like to return on my investment, and thankfully it's been a great return on my investment. And
awesome.
But most importantly, I'm just taking that whole journey. It's been a great learning experience, for sure, and we've learned a ton. We've had some fun with it.
I think it gave you a lot of confidence too, right? Because this is technically your first venture, more full-time, post the corporate life, right? Like, obviously you worked in various divisions at IBM, and I mean, obviously when I spoke to you one-on-one, I knew you were more than capable of doing so, but obviously you had your doubts. I mean, everybody does, right? When they're first doing it for the first time.
Of course.
And I think for you, being able to see that, and now it's been a multi-year journey at the restaurant. And we'll go back a little bit here. IBM, they have huge company layoffs. Unfortunately, you were one of the people affected. And at that time, you're sitting there, wondering, what are my next steps? What do I do? Been doing corporate the whole time. You're working. You have the restaurant as well. But obviously, you're not trying to you're going to just be idle if you're sitting at the restaurant all day.
Right. I mean, it's not for me. I mean, to be honest with you, like, you know, the whole evolution of leaving IBM, it actually worked out quite well. I mean, I was thinking about leaving regardless at the time.
No,
so,
I know we talked about it. The
yeah,
timing lined up. Yeah.
so leaving there, and then I got my real estate license, you know, around the tail end of my career there, and there was an opportunity to leave, and it worked out quite well in that sense.
I don't think you'd be here today if IBM didn't force you out.
You know, I don't know. It's a good question, right? Because you know, I had the restaurant already, and I had all these multiple different businesses and real estates that was working out, and then I said to myself, geez, I love real estate, so I wanted to get into real estate full time, and so I got my real estate license, and I said to myself, geez, it's hard to leave that company that I've put north of 20 years in. And so then when things were happening, I said to myself, geez, this is the opportunity, right? I'm going to do it. Right. And so, listen, at the end of the day, the stars aligned, and I managed to work with them, and I'm grateful. I'm grateful for what they gave me from an experience, but also, you know, leaving on fantastic terms there. So then, okay, I was ready to go. Here we go. I'm going into real estate. I have my license. You know, I've worked on a couple of deals, and then all of a sudden I got recruited from the Korean company, right? I said to myself, they wanted me. I was executive vice president of sales, marketing, and they wanted me to run the Canada division. They got my information, and I said to myself, geez, I don't know what to do here, right? Like, it's a great opportunity to try something different, like ground up. And you know, so the real estate was there still, and it was itching for me. And I said to myself, okay, you know what? So I decided to go head first into the Korean company. Obviously, I wanted to try it. It was a different experience, corporate, but also different in the sense that everything was new. Setting up the
and I have a question for you. Would you say it was also the stability of the paycheck that was kind of attracting you towards it? Obviously,
definitely that's an attraction where, okay, you know what? You're having that steady flow. I mean, like I said, the restaurant and everything else was great, but you know, you get used to, you know, also the corporate income coming in. I said to myself,
and that's probably because both in Vivo and both in real estate, you had to put a lot of capital upfront.
Yes,
and you're only getting trailers or small amounts coming back out, and pay like appreciation and equity build up over time and cash flow, but it isn't as imminent as sometimes maybe your long tenured corporate career, right?
Absolutely, right. I mean, there's a comfort, and even being at IBM for so long, there's a comfort there. Why'd you leave? Why don't you start something new? Well, you have. I don't want to say I would call it comfort, right? You have like, you get challenged, and you have that comfort. You have your steady paycheck coming in, and entrepreneurship is definitely, you know, there's work to be involved up front. There's rewarding in the end, which we'll get into later, but there's definitely, you know, risk, reward, and uncertainty, and you don't have your steady flow, and so yes, you get comfortable. And then when the Korean company came along and offered me this opportunity, I took it. Reason why I took it, because it was new, it was different. It was starting something from pretty much entrepreneurial, because we're starting things from scratch here. I went down there, I met some great people, I had a great experience, and now it was a short stint. I was only there just over a year, but and the reason why we decided to, you know, to shrink the Canadian operations, very, very small, the Canadian operations, and it was smaller than I thought it was going to be with regards to at the tail end. And I said, you know what? And something kept pulling me to real estate doing full time. It's like real estate, if you're going to do it right, you got to dedicate full time, right? And I said, you know what? If I wasn't willing just to work a paycheck 9 to 5, and I wasn't there anymore. I mean, like I said, I have all the other investments that are great, and if I don't do it now, I'm never going to do it, right? And that's what I said. You know what? I decided to leave the Korean company and do this full time and start it right. And I've seen so many different real estate companies, and I figured I want to try to apply what I've learned in my corporate career, my investing journey. You know, starting a business, the restaurant, and also, you know, pretty much starting the Korean company into into real estate. There's a lot of quality people in real estate. There is, but there's
Yeah.
also a lot of not quality individuals in real estate too. I want to try to take what I've learned and learning from some great people and apply it to iStreet Realty Group that I've started.
And so you basically take a systematic approach from your corporate experience and you apply that to make data-driven like decisions and help your clients, right now?
100%, right? So database, we've got tons of data that we're working through. We synthesize it. We leverage all the latest tools. Some of the things that I've learned on my corporate career, we're building all kinds of cool stuff, right? And I'm out there. I'm getting more and more used to the social media, which is important. Being out there, marketing is important, right? And
Why we're here today.
and exactly, right? And it is. People need to know my story. People need to know where I'm coming from, and it's a point of sincerity, right? I mean, I'm here to help, and that's where it kind of boils down to. When you provide value, and when there's no other real, I don't want to be that slimy sales guy. I never was, and never want to be, right? I want to provide value, and when you provide value consistently and help people, I've helped a lot of people along the way. Without anything in return, which is great. There's a different type of reward that you get when you do things like that, right? And I want to continue to do that. And when there's a deal or two that along the way, that's kind of my vision. I'm kind of building a team here, and that's the culture we're creating. I have a culture at my restaurant. That's a fantastic culture. Very few people have left. And people saying, "Geez, how do you keep your people?" Honestly, we've got a great culture, right? And then with my tenants, very few people have left too, because again, I create a culture of people want to work. I want to work with them. They want to work with me. We have a mutual respect, right? And then with the real estate company, same thing. Culture I'm building here and is strong, and I want to attract the right people, both from a customer perspective or client perspective, and the people that are working with us, type of thing.
That's awesome.
Yeah.
And I guess like a big thing is predominantly up until now, whether it's your business in iStreet Realty right now, where as a real estate firm, you guys are helping people buy and sell real estate within the Vaughan, Nobleton, and surrounding area.
Yep.
But Viva Pasta is also in Nobleton. Most of your rentals were around the Vaughan surrounding area. So geographically, like Vaughan and surrounding area has been your main focus, just because it was close to you. If you ever had to run to it, you could always go there and deal with any issues.
Exactly.
And you're kind of like the backup plan.
Exactly, right. I like to make an appearance at the restaurant. The beauty of it is around the corner from my house. So, I'll come home from the office, swing by there, a couple nights a week, Friday nights or Saturday nights, we kind of take turns being there. And it's just meeting some great people. It boils down to that. I know through my career, and people know me, that I'm definitely a people person. I enjoy it, right?
Sure. We definitely jump on what's supposed to be a 5-minute call and it becomes an hour of us chatting.
Oh, for sure. And you're great too. And I'd be remiss too. And let's deviate into Foundation, like you guys. You're not asking me to say this, but I'm going to say it. You guys, and it's part of my whole theme. And the theme that you're seeing here is I wanted to invest in things that I believe in, that I felt strongly about, right? And part of I got the rental properties. Part of I also invest with you guys, right? And I'm investing with you guys because number one, I researched what you guys do. It's based on buildings. The fundamentals are strong. And number two, the returns are strong, right? And I feel very confident, and I still do. I mean, as you know, I invest with you guys because it's one of those set it and forget it type things, right? And so I thank you guys for that.
No problem. I think the big thing for you was obviously like we were working on an accounting front, but we also talked a lot about real estate investment and like kind of what is the downside, right? Obviously, I live in the Vaughan, Woodbridge area as well. Jeff's out in London. How are we managing things over there? What are we doing? And I think it's a repetition a little bit about kind of what you learn in corporate and stuff like that, as well as even though if I'm not physically there, we have our managers out there taking videos, sending pictures. We're always analyzing the market on like a weekly basis to kind of know where rents are at, what are the latest sales, what's going on, so that we're very informed and tied into it. And part of it is, again, early on, we were at the properties quite a bit in order to be able to understand like, hey, what are the pain points? how do we solve them in order to drive and generate that return for investors?
Okay.
And obviously, I was willing to, myself and PB were willing to make that commitment to drive, a couple hours each way every time, which, is really basically it takes away a day or two
Yeah,
in order to do that. Right. And that's obviously why, since we've put in all that time over there in Southwestern Ontario, is why we continue to focus on it. Obviously we know the market entirely there. And we can generate those cash on cash returns for our investors, which I think you've been enjoying, and I think as a result you've been contributing consistently into the fund as well.
Absolutely. It's been great, fantastic.
But I guess the question is, obviously one of the things that we talked about previously, not on this call or here, but you were doing all these individual homes, townhouses, condos. You did triplex in Vaughan, but you started already investing with us before that.
Yep.
That's because you looked into multifamily. You knew that was somewhat where you could force that appreciation, where it was a little bit more stable, and where you could do the BRRRR strategy, where you can push the value up, renovate it, rent it for higher rents, pull your money back out, and still cash flow.
Correct.
What specifically, I guess, about us kind of attracted you to us?
And so great point there, Amit. So what I always wanted to do, kind of, they call it the BRRRR strategy. I always wanted to be a part of that. Now, during my corporate career, it's quite consuming, and plus having the restaurant now the last 3+ years, I always wanted to do it, but I figured if you're going to do something like that, there's some dedication you need to have, right? And there's some work that needs to be done. And I figured I wouldn't be able to give it, if I was to do it on my own, it would be very difficult for me. So I figured, what's the next best thing, right? I know that you guys, and I researched, and I figured you guys are doing it. You guys are doing the BRRRR strategy. You've had the record of success. So I figured, okay, the next best thing of me doing it myself was, you know what, I'm going to invest with Foundation, because you guys are doing it, right? And because again, I wanted to do it, but I didn't. It's a bigger project than I was at the time that I was able to tackle. So, so we, I looked into it. I have multiple calls with you. The comfort was there, and got to meet Mid and Jeff, and then I was one of the early adopters because I believed in what you guys are doing. It was the right strategy, right? And thankfully, it's thankfully.
No, honestly, thanks for your support, and it's interesting because obviously you come from a corporate background, and obviously someone who's seasoned in it, right? So it was very important that when we talked about things, that we had the right answers or had the right processes in place to kind of mitigate risks, right? I think one of the biggest questions, since you've known us, is we've gone from middle of the range interest rates to high interest rates, now rates coming back down, and we've saw the rise and fall of other investors, other real estate firms. And I think obviously one of the things that we do consistently throughout is we've been communicating and talking about where markets are, kind of adapting, right? And I think that's a little bit of what you did over at Vivo as well. And now you're kind of helping clients at iStreet Realty when they're buying homes now, right? Or buying a property for their kids to live in.
100%. And it's about fundamentals, right? Like I said, the fundamentals that you had and what I've done throughout my career, not only at the corporate, but also in my investing journey, was look at the fundamentals. You guys never bought on speculation, right? So you're buying on speculation, or you've never done that. And that's why, unfortunately, some of the people that got caught in the whole 2022 ramp and COVID was they bought on speculation, right? And that's not what you guys do. You guys are buying on the fundamentals. It's like the property is strong, it's close to schools or whatever it is, but also the property is strong, and you make the money on the buy, Mitt. You know better than
100%. I mean, we've talked about this all the time on the call, on our calls, where you make them as much money as you can on the buy. You never force yourself into a deal. Mm-hmm. And you always see what other value you can drive out of it. And I think, close to schools are always good, especially when you're looking for renters, but also hospitals, and multiple employment sources, right? And I think obviously with outside of the fund, we also had some properties as well in some smaller towns. And we were just talking about a smaller town while I was in Europe. I think you were trying to make an offer on a 12-plex, right?
Yeah, 10plex. So
Simplex, yeah.
we'll see. I mean, again, I'm as through my evolutionary journey, I got to carve out some time because I've
Yeah.
done enough of the smaller ones, and I figure, you know what? So I may pull the trigger. We'll see. We'll talk.
Yeah, but I think a big thing that I guess everyone in the audience can take away is that like you're thinking always in a somewhat longer time horizon. You know, it's not what am I going to make in the next 6 months? Oh, I'm not just getting the money today. It's kind of like, you know what? Over 5 years, I'll make in like a good enough return.
Absolutely.
You know, and that you've been buying since the early 2000s, right? Or so
Yeah.
from your primary residence to then investment properties. And I think even though we've had prices go up, down, the demand to live in Canada and the demand for these homes are pretty high, right?
Absolutely, absolutely. And when I look at my, because I'm inundated with all the analysis like we talked about, prices, people are saying, oh my God, prices are down. Prices are down from 2022. But when you look at 2020 prices, where prior to being polluted by the whole COVID phenomenon, we're still here. We're still there, right?
Yeah,
And that goes pretty much across the board, right? So
it's because late 2021 to early 2022, it was like super fire, like market through the moon. Like I remember I bought my house here in Woodbridge,
yeah.
and I bought it in the lull of August 21. So I actually got it for a discount than what it was listed for. But I guess as I closed it in November, if I had just sold it as is, it would have gone for an extra couple hundred, like $400,000 more.
Ridiculous.
And it's not there now. I think it's now back at basically the price that I bought it at. And that's just because there's like a lack of inventory in this area, especially like if you renovated your home or done some upgrades. And I think the quality of people that are living in the community and like kind of where they work and have that employment income, right? So I think obviously looking at those fundamentals, it allows where you want to buy your home and where you want to like live long term, right?
Absolutely. Like I said, the market, people get like, oh my God, the real estate is it's nerve wracking, or it's come down. You got to look at the time horizon that you're talking about. 5 years ago, we're still a sizable amount above where we were in 2020 and 2019. Absolutely, across the board, right? So you can look at, we're going up 30% in a year, 30 in real estate, 30% in 1 year. Like that's not sustainable, right? So you gotta step back. Myth. You and I both know. Look at the fundamentals, and you look at your time horizons. You look at the last 10 years, and you look at what I bought. One of my townhouses in 2012 for 450 grand in Woodbridge. That townhouse today, in today's market, is $1.2 million.
Yeah. Wow.
Just as an example, right? So,
no, for sure. Yeah, like Vaughn's obviously had a lot of success just due to like overall GTA growth as well, right? And like I went to high school in Vaughan and stuff like that, so I have positive things to say. But yeah, I remember doing my co-ops at PwC and thinking, I think right around the time that you bought your first place, I was like making my cost audit. I'm like, I should buy a house. It's like $400,000. Like, I wish I did that. I would have saved like $1 million+ dollars. But
listen, I'm with you, man. I wish I would have bought more, but at the time, no, right? At the time, again, going back, I said to myself, I just want to have something that once I put a renter in there, you set it and forget it, right? And I did. I set it and forget it, and here we are. 10 years later, and it's worked out quite well, right? And I'm happy. I'm grateful because it allows me the freedom and to I feel confident in this business that I'm running right now. I love it. It's my passion. And this is this next phase of my career, what I want to focus on, because I have all that other stuff that I was grateful and I did, that's worked out, and I'm very happy and grateful. And now I'm building something special my way, right? And
awesome.
and I feel the right way, right? That's with that value base, that can hopefully help people short and long term. Right?
So if you go back, let's say 5 years ago or a little bit more to when we met, and you were talking to yourself, and Foundation Capital, what would you tell your younger self?
I would state invest a little bit more in Foundation. Well, joking aside, honestly, that's been great. You guys have proven to be more than what you've committed to. Like I know that you say the 12 to 15%. One of the years was fairly substantially more than the 15%, right? So, I mean, 5 years ago, I said to myself, from an investment perspective, I always want to be growing. I always want to challenge. Didn't want to always take the safe is not the right word. I wanted to do the calculated risk, right? Because there's risk tolerance, right? There's risk in everything, right? GIC is going to get you whatever 3-4 points. There's no risk. Well, almost no risk in that. But if you look at things that are a little bit more, there's a risk tolerance that's a little bit greater. But then you look at the fundamentals and you look at what it's backed by and hard assets, which are real estate. I mean, what are the worst things that are going to happen? And then knowing the kind of company you guys are doing and the whole burst strategy, you check off the risk tolerances gets lower and lower for a person like me, right? And so
no, for sure. I think sometimes people ask that question, like, okay, like where's the guarantee? And we say there's no guarantees. All investments carry risk, but our business is multifamily rental apartment buildings. So if we sell it, you get the building value minus mortgages, minus any bills, and then rest gets distributed to investors. So that's where it is. It's not like we're a startup. We're not doing, development of luxury condos or something like that where we're subject to risk of sale. It's just demand for rents, right? And I'm sure you've seen it. Your rentals are always pretty full.
Yeah, I mean, I've been grateful there. I mean, it's the right areas, the fundamentals, and making sure that and then you vet the renters. Everybody's afraid of Ontario renters, and you have a lot of people go to the U.S., which that's great. That's a business model. But at the end of the day, there's quality people. You have a quality product, you're going to attract quality people, right? And I firmly believe that, right? And it's worked out, handsomely for you guys and for me. And again, but it's all about give and take. It's all about being there, running it right, restaurant, run it right, provide the quality product, and go from there, right?
And then, well, I guess that'll lead back to you built your foundation correctly, right? Both from a career perspective, you diversify yourself to learn all the different skill sets so you could fill the gaps where you needed. Similarly, while you're working your corporate career, you're making those earnings, you invested in real estate. You invested with us in private real estate investments as well to get that multifamily exposure that you weren't able to get to or afford in the surrounding area. And now, you're obviously doing your other business to generate wealth as well. But I know that you also did a little bit of stocks and options as well in the past.
Yeah, I did. That's along the way. I'm always trying to learn. So I did a little options trading, and that worked out pretty well too. Actually, I mean, it had a little bit of wonkiness.
But I guess at the time when we talked about it, it was going well, and then suddenly, obviously, we had like market dumps or whatever. And I'm sure you were like, "Oh, I remember you were like, oh shit, man, what am I gonna do?" I think that's what Meta dropped hard at that time, right?
They did. I have a couple of my companies that I've invested in, Meta and Tesla and AMD. They got hit, and Palantir got hit. Those are some of the ones that we invested in fairly substantially. And but
this was, and what time was this? What year?
When did I start? 2020. Was it
2021 or 2?
Yeah, it was when I started. Things were riding high, and then everything corrected, right?
Yeah.
But what's the common theme in the investment?
You waited out.
Fundamentals. What are the fundamentals of those companies, right? Meta, Palantir, AMD, and they've come back, thankfully, wonderfully.
And what's funny is it's come back wonderfully, also because you just ignored it too.
Yeah,
right. It's kind of sometimes you just have to let things sit still, right? Even sometimes when we're looking at real estate and tinkering, sometimes investors always try to do the next thing, like how do I just let it more? Sometimes it's kind of like just take your hands off, let it be. Look at the next opportunity, or just wait to get the right thing, right? So
don't panic. I mean, at the end of the day, look at the fundamentals. Get the right guidance. You and I have many conversations, but also those companies. Nothing is wrong with those companies. They're just media influenced, and so as long as those fundamentals are strong, I was patient. And thankfully, that's they've come back, and I think there's still room to grow on some of those, right? And doing some different things and whatever, right? And so yes, it's been great. And the stock options has been a little side thing that I did too. I found a little corner in my brain to and it was fun, right?
So you found multiple different ways to diversify your income streams and then build your foundation of wealth, whether that was through direct real estate investment, investing with us, and and then other ventures with Vivo and now your real estate business as well. So
Absolutely. I mean,
that's awesome. So obviously you're doing all of this because you want to go to the grave with a big pile of money, or
it's funny you say that. I mean, a lot of people say, "Oh, geez, Rick." I mean, honestly, this venture that I'm going on now, I could do two paths. I can just kind of do nothing at this point. I mean, I can enjoy the restaurant and that's it. Or I can take another corporate job, which it's just, I'm at a position now that I've built something that now I want to do something that I want to do. And this is what I want to do. This real estate company is, I'm building something sustainable, something fun, something that people are not really seeing out there. I mean, there's not many companies that are built on smaller companies. It's boutique style that I'm fostering here. That's going to help people both, focus on upsizers, people like myself that are, I'm between 45, 55 years old and I want to move into another house. How can we do it? Or an investment property. How am I going to buy a house for my kids, right? Like,
Yeah.
Thankfully I've done that throughout, so my kids are okay. But it's just, how do those regular individuals that have a house that's paid off, how can we do that? There's multiple different strategies.
And I think it's fair to note as well, like, you've obviously had, you went through like a divorce, separation, and had a new partner now. So like, I think for all the listeners, it's a big journey to go through, because obviously there's a lot of financial burden. At the time, it might seem like, oh, everything's going to go to hell.
Mm-hmm.
But despite all of that, Rick, you've gone down to build a pretty large portfolio. You build on investments for your kids. So I think a lot of people, it's easy to sit on the sidelines and say, hey, I don't want to just take any action.
Mm-hmm.
I think maybe at times, Rick, you could be slower to action, but you've been pretty quick, to be honest. And I think that's what's allowed you to succeed, is you've taken that action and you've been able to get into a lot of number of things.
And you raise a good point, Matt. I mean, at the end of the day, it would have been easy for me to just throw it into a bank stocks or money, or just don't do any investment, because sometimes there is work to be done. Like a renter needs to turn over. There's work to be done. It's no doubt, right? But no risk, no reward, but it's calculated risk, right? And you said it right. Taking action. Don't just sit there and say, oh, well, maybe I'll do it later. That is the biggest thing that I've seen too. Even with me, I mean, I've taken some action. People say, Jesus, this guy's got so many things going on. Yes, but there's so many opportunities that I said, and then I passed up too, right? So seize those opportunities and take action. And if it feels right, do your right research. If the right fundamentals are there, and weigh the pros and cons, and speak to the right individuals, and pull the trigger.
So if you're listening to this and you're sitting on the sidelines debating whether you should get into multifamily real estate, just shoot me a message. You can get invested for as little as $10,000. But also, if you are a person who's transitioning homes, looking to get into investments, feel free to reach out to Rick. Honestly, super friendly guy, can help answer questions and kind of talk about like his whole journey, right? Especially if you're in the Vaughan and surrounding area. I think you're, like, for me, somebody who lived in Vaughan most of my life. Even when you bought your triplex deal, which you got for a steal, and that was like kind of when like everyone's like, I don't know where the bottom of the market kind of is, but you were very confident. You're like, you know what, like, this is crazy that this person's even listed for this price. I'm gonna like get it for this price, and I can spend X dollars and I can rent it out for this. And I was like, really, Rick? You can do that? Like, I don't think so. And then when you showed it to me after, I was like, holy, like, good for you. You're going to make out like a bandit on this. Like,
worked out well.
It worked out well. And that comes from, though, the fact that, like, you knew the neighborhood really well. And like, I think obviously most agents or people in the business aren't even investors themselves, right? No. So they might own their primary residence. And some might not even own their primary residence. So I think that's what's important. I think, when we go back to how we met, obviously, knowing that I own real estate and had a portfolio, and how we structured things was a kind of a reason why you went with us for accounting. Similarly, you want to work with an agent who actually does that, not just works with investors, because obviously then they'll know what investors look for, but they're maybe never ever thinking like, if I own this, what would I do? How would I handle this? I'm sure if you're a client of Rick's and you bought a rental and something happened, you call Rick and Rick will show up and deal with it for you.
I would with the pizza in hand. So, yeah, and you said it right, man. I mean, yes, I've gone through it. And I definitely, there's just opportunities out there. There's lots of opportunity out there right now if you're an investor. Also, if you're an end user, right? Like you want condos right now, they're back to 2020 pricing right now, right? And so they're great investment tools. Or if you want to get into the market, right? Like those are some great opportunities for those first-time home buyers as well, right? Like absolutely, right? Or a nice townhouse. Right now, townhouses or semis, they're fantastic opportunities for those people that didn't think it was possible just a couple of years ago.
And don't you find it crazy? I guess as we hit 2021, 2022 peak pricing, people are like, oh, I can't afford this anymore. But then as prices drop and now they're probably sitting on some more cash, they're so hesitant because they want to catch the absolute bottom, right? And you're like, okay, but you're never going to catch that bottom. And then by the time you're feeling comfortable and be like, oh, I need to buy, it's likely going to shoot way back up.
Exactly. I mean, you can't time the market. It's time. What's the old saying there, Mitt? Time in the market.
Exactly. Yeah.
So, listen, I mean, anything can happen in the near future, but I mean, interest rates, we're probably going to see some more declines, maybe one more this year, a couple more in 2026. So I feel the pricing right now is we're in that sloshy kind of area right now. I don't see.
My thoughts are like this coming winter, like this December to February is like ideal time to get it, like to tie something up to close in the new year, because after that you can't really, you don't really know what's going to kind of happen, but it's probably call it the lowest point or lowest, I guess, confidence by the market. And I don't know if you know this, Rick, but in 2026 that foreign buyers ban gets lifted as well, right? They only had it in place till the end of 2026.
Yeah, absolutely. And the government's going to try to do things to stimulate in 2026 too.
Oh yeah, they're going to print. So obviously, guys, if you're paying attention, like, and you saw in our newsletters, like Canada has been printing like 6% the past year. So the value of your currency is effectively going down 6%. So if you're not making more than 6%, so leaving it in a savings account, checking account, you're basically losing money to the government printing cash. And as you know, we hear from the government, like they're going to quadruple defense spending to like $100 billion. And I'm like, we don't have it. We're already in a deficit. So the deficit's only going to increase. So they're going to only have to print more cash to be able to do so. Or they'll also stimulate the economy to get more money to come in, which will be lift the foreign buyers ban, let more immigration in. That's going to drive up demand for rental and fill up all the existing kind of supply that exists. But all the new build stuff has basically been canceled or delayed. So there's like, for end users, there's like going to be a glut of inventory in like 2 years. Where
100%, I couldn't agree more.
Yeah.
Agree more. And I think right now in 2026, we're probably going to see stability. I don't think we're going to see anything up or down for all of 2026, but I really feel in 2027 we're going to start to see that creep up, and with interest rates a little bit more reasonable. We'll never see 1.5-2%. I don't think ever again, right? Like
I think we will.
You think so?
I think so, just because of it's weird. Like, right, even like if you look at the stock market and stuff like that, it's only a handful of companies driving growth. Otherwise, everyone's in the shitter at the moment, right? Like with where interest rates are in the US and in Canada, like people aren't able to survive. And like the only people who have been making money hand over fist consistently has technically been municipal and provincial governments, with them increasing their fees on everything.
Yeah.
Right? All other businesses have had to like reduce or manage it. People have burned through their savings just trying to keep their home, right? And I think that's the craziest part is in 2025, 2023, 2024, people burn through interest reserves. Lenders have reduced LTVs. There's like no cash that people have now, so they're not able to spend as much. Obviously, stimulus and things will help.
Yeah.
But I think if you're an existing Canadian, you gotta like be invested in some hard assets and have that grow over time if you're trying to get into home ownership, because like again, salaries aren't keeping up. So in order to really stimulate some of these businesses or people, they're gonna have to bring rates really back down. Otherwise, like you're gonna be in a really big.
I agree. I think rates definitely come down. I just don't know. I mean, this is all speculation here. I just don't see them coming down to the levels that they were in just after COVID. Like pretty much free money. But who knows? Nobody's got a crystal ball. I don't think it's healthy for the economy to go down that level either, right? People just started doing some crazy stuff at that point, right? So, but anyways, time will tell, my friend, right? So thank you. And the pleasure was mine, Mint, and I appreciate it. This was a great, great interview or great discussion.
If you're trying to reach Rick on Instagram, you can find him at iStreet Realty Group, or you can also visit his website at iStreetRealty.ca.
Perfect. Thank you, Mint.
Thank you again, Rick, so much. Everyone who's listening, hopefully you found value. This is a story of a guy who started, a corporate journey job, built up a real estate portfolio, now has multiple businesses and continues to invest, and also invest in multifamily passively. So thanks so much, Rick. And if you've been enjoying How to Build Your Foundation series, add a comment, send it to a friend, or subscribe to the channel.